Friday, February 4th, 2022, Monaco 64, home of alternative economics and contrarian views. So things in the financial markets, not only in the stock market, but the bond market worldwide are getting very interesting. And at the same time, there's speculation of whether China and Russia are ready to announce some kind of deal. President Putin and President Xi are meeting today in China, I think just before the Olympics kick off, the Winter Olympics. They're expected to come out with a communique. I don't know if they've done it yet. I don't think they have. I haven't seen any headlines. But the speculation is that they could announce some kind of new Bretton Woods. And what is Bretton Woods? Some of you might not know what Bretton Woods is. I've covered it here for many years. So we'll quickly go through what Bretton Woods is. And I'll take it from Wikipedia. I know some of you don't like Wikipedia, but in some instances, it's quite appropriate. So, Bretton Woods system. The Bretton Woods system of monetary management established the rules for commercial and financial relations among the United States, Canada, Western European countries, Australia, and Japan after the 1944 Bretton Woods Agreement. The Bretton Woods system was the first example of a fully negotiated monetary order intended to govern monetary relations among independent states. So it's something very novel at the time, because prior to that, countries had their own currency. A lot of times it was silver coinage, also some kind of gold coinage. They had sometimes paper currencies. There was some kind of agreement back in the 19th century, latter part or second part of the 19th century. There's a Latin monetary system where they basically decided, countries in Southern Europe decided to use the same standards for gold coinage. Yes, there was some kind of unofficial gold standard as well, where countries used gold for trading up until 1914, of course, but it wasn't as organized and negotiated as Bretton Woods. And gold, of course, was the main anchor of this system. So it says the chief features of the Bretton Woods system were an obligation for each country to adopt a monetary policy that maintained its external exchange rates within 1% by tying its currency to gold, and the ability of the IMF to bridge temporary imbalances of payments. So it was only the dollar really that was convertible into gold up until August 15th, 1971, of course, when Richard Nixon closed the gold window. And you couldn't go as an individual to the U.S. Treasury and get gold, but other treasuries from sovereign countries who were part of the Bretton Woods, they could do that. The other currencies, you couldn't do that, but they were indirectly pegged to gold through the dollar. They were fixed against the dollar. The system really didn't work out because the United States started abusing it, and I think the Europeans saw it, and that was mainly in the 60s and early 70s with the Vietnam War. Yes, wars are always costly, and they always lead to inflation. So this system, of course, has been kind of running still, and now it's called the petrodollar. But countries like China and especially Russia are fed up with it, and other countries as well, because instead of using the system to cooperate for trade and commerce, the United States is really abusing it, in my opinion. And this is not a dig at Americans. I think the problem with most countries in the world these days are not the people of those countries, but the government of those countries. And it's ironic, I think, that countries like China and Russia, of which we're told by our mainstream press that they're dictators, that they're horrible, that they abuse human rights, that they're the ones looking to implement something that, in my opinion, will be beneficial not only to the people of China and Russia, but for the people of all other countries. And I'm not going to get into all the details of human rights abuses supposedly in China and Russia, because we have our own human rights abuses in our own countries. And unfortunately, there's been too much of a divide and conquer. And it's unfortunate that the West isn't working as closely together with China and Russia. If anything, they're trying to push them probably into a conflict. But I've been noticing that Europeans are thinking differently. Germany is kind of sitting on the fence, so to speak, on whether to go east or west. France apparently. President Macron, whatever you may think of him, he's been meeting, I think, with the Russians for the last few days. And the other two things that I think are interesting that I noticed is that the president of Argentina, his name is Fernandez, Alberto Fernandez, and Argentina is the second biggest country in South America. Of course, it used to be a very rich country over 100 years ago. It was like the Saudi Arabia of the early 1900s or something, with all their agricultural wealth. But anyway, he met with Putin yesterday, and just before Putin meets with Xi today, and Reuters reported, Argentina's Fernandez in Russia says must end economic dependence on US and IMF. The other interesting thing that I've been talking about for the last, over a month is that the president of Brazil was invited to go to Moscow by President Putin for a state visit last year. And he confirmed a month ago or so that he was going to go. And it's going to be after this Putin-Xi summit or meeting today, of course. But apparently now the Americans are asking Bolsonaro not to go and meet Putin. Notice how they didn't tell the Argentinian president not to go. Probably because Argentina, even though it's a relatively big country, is not as important as Brazil. So this story here, the Brazilian report says, Bolsonaro confirms trip to Russia amid escalating tensions. And I've seen that the US has been trying to tell him not to go. So let's quickly go through this. It says, before meeting with his Peruvian counterpart, Pedro Castillo, this morning, Brazilian President Jair Bolsonaro reaffirmed his intention to visit Russia in 2 weeks. So this story is from yesterday. This visit has rubbed Western powers, especially the US, up the wrong way, considering the escalation of hostilities with Moscow in recent days. Russian President Vladimir Putin denounced the US for deploying additional troops to Eastern Europe, saying the move was intended to stir up tensions. So, what do I think about the meeting today? Do I think they're going to announce a new Bretton Woods? Probably not. I think they are talking about it, but it would probably require more countries to attend just than Russia and China. You'd probably want to see Argentina, Brazil, and a lot of other countries, maybe India, Iran, South Africa, maybe even Germany and other European countries to be present, because you need to negotiate with everyone. It's going to be difficult to envisage the United States being there and the UK, seeing that they're so hostile to Russia and China these days. But who knows? And what could that do to the price of gold? Because people always think, oh, a new Bretton Woods, Russia and China, they've been accumulating a lot of gold. I don't know. I mean, for me, the most important thing is that we get a system that's honest, and it would be ironic that you get an honest world monetary system engineered by Russia and China, while the West is supposed to be free, democratic, but our monetary system is floundering. Yesterday, as I said, the markets are very, there's a lot going on. And we had a meeting of the ECB and the Bank of England yesterday. The reaction to those meetings by the bond markets were very significant. We are seeing bond yields across Europe and the UK move higher, a lot higher. I think the central bankers are cornered. Yes, the Bank of England raised rates from 1/4 to 1/2, but they're trapped. And the ECB was apparently quite hawkish. President Lagarde of the ECB, Madame Lagarde. And I listened to her a little bit, and it looks like they will stop QE soon, towards the end of this year, and then maybe even raise rates. And we're seeing the euro pick back up versus the dollar. We're seeing the German 10-year yield actually jump quite strongly from being negative for over 2 years. It's now almost at 20 basis points. We're seeing the UK gilt yields jump as well. So I think they're desperate. The central bankers, they're all saying that, yes, inflation is going to go up a bit more, maybe to 7% later on this year. But in 2-3 years' time, it's going to go down to 2%. And I saw that Bailey of the Bank of England said, well, we're not going to be raising rates much past 1.5%. They're desperately trying to keep the bond vigilantes asleep. And who are the bond vigilantes? Well, they used to be the people who kept a check on government spending and fiscal policy back, and also monetary policy back before, I would say, the mid-90s, early 2000s. Since then, governments across the West and central bankers have been given the benefit of the doubt. And that's why the bond vigilantes have gone to sleep. But now I think they're awakening. And that could be a huge problem for not just Europe, but the US, with bond yields going up. And why are bonds so important? Well, because they determine the price of money. The price of money determines asset prices, stock prices, everything. And of course, we'll go on here into the markets. And yes, yesterday, I saw the stock markets came back down, very volatile as well, the stock markets. The NASDAQ lost over 500 points on the back of, what was it? It's changing so much. It was Facebook the previous day. Metaverse had really bad results. Stock there was down over 20%. The Dow was down 500 yesterday. So a pretty bloody day for the stock market. Down 3.7% NASDAQ. The S&P was down 2.5%, and the Dow was down 1.5%. Yeah, and gold got hammered down to 1788. It rebounded up to above 1800 towards the end of the day. Silver as well traded just to, I saw it, the low was 21.99 or 22, and rebounded back up fairly strongly as well. We're still going nowhere, really, consolidating in gold and silver. Some people think we're going to drop further, like to 1500. I spoke yesterday did an interview with the market sniper. He's very bullish the dollar, and I'm not longer term, but people always have a different view. Some people have different views than others. Not sure when he's going to publish that interview I did with him. It was quite a long one. The other day I was also interviewed by Wall Street Silver. Haven't seen if that's out yet, and that will be put in the community section as well. So where are we right now in terms of gold? Well, we are 1808.50. 1810 has been the high, and a few weeks ago that was a key level, the area around 1810.12, before we broke that and went to like 1857, I think. So right now it seems to be a resistance here, 1810. We're up about $4. The low's been 1803. Silver is up 8 cents at 22.50. High is 22.60. The low 22.39. To the currencies, yeah, the euro looks very good. I think the key level on the upside is 114.85. That's like a recent high, or maybe I don't know, weeks or months. Let's check here. That was a high from actually middle of January, 114.85. So that's going to be a really key level now. Even though the euro has really rallied very strongly since the end of January, we could see some short-term correction here. So yeah, the euro, as I said, is fairly strong. It's up another 0.15%. We are at 114.58. The high's been 114.72. The pound rallied yesterday as well a bit during the Bank of England press conference and their announcement. They raised rates by 0.25%. And what was interesting is that 4 of the 9 members of the MPC voted to raise it by 50 basis points. And the pound went up above 136 on the back of that. But then it's returned down and actually finished relatively unchanged. And right now we're at 135.66, down 0.25%. So the dollar is up 0.1% versus the yen at 115.09. Dollar's up 0.1 as well versus the yuan at 635.93. Aussie dollar is down 0.5% at 71.08. And the dollar is up 0.25% versus the Canadian dollar at 127.13. And the Kiwi dollar is down 0.2 at 66.43. To the commodities. And yeah, the commodities still looking very strong. Central bankers are blaming energy for all the inflation. They're not mentioning the fact that they created more currency in the last 2 years than they'd ever done maybe before, especially in the US, but all other countries. They've been increasing their balance sheets massively for the last 14 years. No mention of that, of course. Yeah, I'm surprised here. WTI crude is above 90. It's up about 1.2%. So there you go. And high-grade copper is up 0.5% at 4.49. Natural gas has come off. U.S. nat gas, it's back below 5, but it's up slightly this morning at 4.88. So yeah, that's not helping. The central bankers are hoping that energy prices come down and then you get this move in crude. I mean, this is quite significant here. Let's have a look. Yeah, this is wow, this is the highest level since 2014 for WTI crude. So it's almost an 8-year high. And with that, let's look at the bond markets. As I said, European bond markets look very interesting. The 10-year yield is at 183, so it's up from when I spoke yesterday, about 6 basis points. Overnight, it's unchanged. The German 10-year yield is at 0.17 or 17 basis points. It's up another 2 basis points. Doesn't seem like much, but I think it's significant because for the last few years, it's been trading negative. And Germany is the benchmark for European bond markets. The Italian 10-year, that's up another 3 basis points at 167. And the UK as well, the gilt, the 10-year gilt, we had an important level resistance at 1.22%. Right now, we're almost up to 140. We got up to 140 this morning. We're at 138. And what does this mean? Well, this means that borrowing rates for consumers, for corporations, and for the government especially are going to rise. And that's going to put even more pressure on the economies, even more upward pressure on prices, even more upward pressures on the cost of living. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.